Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the Smartkarma Weekly Forum. This is a high-impact weekly webinar exclusive for Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. Every week, we try and present 3 key ideas as surfaced across the network. These tend to be organized into a small and mid-cap, a large cap, and a core thematic. At the end of the week, we make video recordings of the forum and upload them onto our YouTube channel. This is to allow you to catch up to old forums at your own time and pace, as well as share them with friends. In today's forum, we will look at Hope Education, which is a Hong Kong-listed Chinese education company. We will move on to look at the Japanese drugstore sector, which is probably the best retail bet in Japan. And lastly, we would look at 3 catalysts that could spark a really strong rally in stock markets. Let's kick off with Hope Education. The ticker is 1765 Hong Kong. The market cap is just shy of $700 million US dollars. The stock trades quite a lot, so it's a very liquid name. And as you can see from the chart, the share price has come off a lot from where it was trading just late last year. Osbert Tang is the analyst who covers the sector, and this is based off of his recent insight on the platform. Few things first, Hope provides educational training, knowledge point sharing across China. This has been a rather difficult area for investors to invest in of late because of policy risk. However, as we have repeatedly mentioned, policy risk has largely surrounded online education players focused on the primary education, whereas tertiary as well as vocational education companies that are more brick and mortar are actually benefiting. In Hope's case, it continues to see sustained growth, and we notice that even without reversal of any impairment losses, net profit will grow over 30% year on year in the first half of 2022. Going forward, student enrollment quotas have been increased by the government, which will encourage more and more students to come. We noticed that the company has also been raising school fees gradually, and that they will go up from about 11,000 RMB all the way up to the national level of about 20,000. That's a lot of upside. Stock is not expensive. It's on 6 times PE. They have a 3-year earnings CAGR of 21%, and there is ample room to beat market expectations. At this juncture, we would highlight that we continue to like the private education space in China, names focused on tertiary and vocational education. Moving on to Japanese drugstores. This is a sector closely covered by Michael Costin, who's based out of Tokyo and focuses on the broader consumption thematics within Japan. Key things to note, the sector has grown 30% since 2015, which makes it the fastest growing retail channel in Japan. The largest chains are the general drugstores, and the top 3 names generate more than 22% of sales from food. That's an interesting trend. The expansion of drugstores into food means they're fast becoming competitors to supermarkets and retailers. Michael Costin believes that by 2025, the sector could break past the 10 trillion yen mark, which matches the size of the convenience stores. There's a lot more growth to come. They're adding stores, there's M&A, as well as meeting the needs of the aging society. If you want to catch up on this insight and see what are the best names to play it, we would refer you to the Smartkarma platform. Lastly, but importantly, is a core thematic around a bear market rally. Cam Hui, who looks at top-down cross-asset strategy on the platform, highlights 3 catalysts that he sees catalyzing a big rally. We hope we had recorded this video a few days ago, as that rally already seems well underway now. First things first, Cam notes that the US stock market has been highly resilient in the face of bad news. We continue to see positive earnings surprises. TMC, for example, raised outlook for semiconductor sales. This tends to lead interest rate cycle by 6 months. We also noticed positive developments on the energy side, and lastly, very strong valuation support and insider buying. All of this means we have catalysts in place for at least a tradable rally in markets. For all this and more, continue the conversation on Smart Karma. Take care and goodbye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smart Karma Plus and follow us on social media. Just search for Smart Karma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.